Hello Wolfpack, couple of things to look at today that I don't typically look at in normal videos, and that is the DXY, which I look at quite regularly, but I don't make dedicated videos on it, and Ethereum, which is kind of the secondary coin that I look into once every few weeks, because at the end of the day, Ethereum generally copies Bitcoin quite a bit. Now, what you'll notice about Ethereum, just straight off the bat, is that even in this recent period of the last few months, unlike Bitcoin, Ethereum has been forming lower highs, right? Whereas Bitcoin, and I'll bring up the Bitcoin chart now just so you can compare, has been forming kind of level highs, right? Kind of in form of a debatable, but, definitely considerable ascending triangle formation, while Ethereum has been decreasing rapidly, right? This just goes to show why, in a bear market, people flock into Bitcoin. It's showing that already. So in a bear market, typically people flock to Bitcoin because it's the most, risk-free asset in the cryptocurrency space. Of course, it's still very risky. Of course, it's still very high volatility. But in regards to crypto, it's the leader of the market. It moves less than all other coins, including Ethereum. And here is the proof of that. Over time, even though Bitcoin has remained stable on the highs, Ethereum has trended downwards on the highs. And that just goes to show that even though Ethereum is the second largest coin in cryptocurrency, in a bear market, it will still trend downwards much faster than Bitcoin. And that is why we're seeing Bitcoin dominance kind of, skyrocketing to the upside on a macro scale. So overall, Ethereum, it's dwindling right now. It's moving downwards quite rapidly. And what we've got right now on Ethereum is a symmetrical triangle formation after a massive ascending wedge breakout. Now, even if we were just to neglect the fact we had a symmetrical triangle formation, that yellow formation, and we just took a measured move from the ascending wedge breakout, what we can see is that, well, this would target somewhere around 1,200 USD for Ethereum. And that would be kind of like my bottom prediction. Now, I don't think this lower green support rectangle is going to hold. My bottom prediction on Ethereum is very much around 1,200 to 1,300. And that's stemming from these two support zones here that I've just outlined there. So mainly that one, that pink line, and then also coming all the way down to this 900 region. But I think we'll scan the upper level of that, right, and possibly do something like this within those two pink boxes. That's where I think the bottom will be through Ethereum. And what I can say is if it's under 900, things could get real rough for Ethereum, because under 900, the next support is 600. Now, it might sound pretty small staying it like that, but that's a 33% drop. So we really want Ethereum to be stabilizing above 900. And I think it will, right? As I said, 1,300-ish is where I think it's going to bottom out. And that's, assuming Bitcoin goes to around 24K, which I think it's going to go to. So yeah, 1,300 seems logical. But again, 900 is a really important zone to hold. We can't be losing 900 here on Ethereum, because if we lose that, there goes the macro structure. We're straight back into 2020 bear market prices, and ideally we want to be above those bear market prices even on the lows. So that's an interesting thing to note there for Ethereum. But yeah, I think it is going to break down to 1,300 as suggested by the ascending wedge formation and as suggested by logic, coming off the fact that Bitcoin's got another just over half, just under half, say another 40% drop, something like that to go, bringing Ethereum to around 1,300 would be a 50% drop, okay? And Ethereum typically drops more than Bitcoin because it's got a lower market cap and hence it's more volatile. And so that would make perfect sense. So 1,300 is the target there for Ethereum for the bear market bottom. It is a little bit harder to be precise about something like Ethereum because we don't have as much data as we do with Bitcoin. So we can't make these clear trends like we can, for example, on this Bitcoin chart, where we can look at the 4-year cycle. And just look at this chart here for a second. We can look at something like the 4-year cycle and what's going on with Ethereum there, with Bitcoin here, but we can't do that on something like Ethereum, right? Because we simply just don't have enough data, as I just said. But generally speaking, I mean, what I can say is that an ascending a symmetrical triangle formation, like we've got here, this yellow formation that we're in right now, that's been forming since January, the start of January, is a bearish formation. And the reason why it's bearish, it's not bearish by itself, but the reason why it's bearish is because we're in a downwards trend. And so when you see a symmetrical triangle in a downwards trend, it acts as kind of like a consolidation zone before another break downwards. That's typically what happens. And so I wouldn't be surprised at all if Ethereum breaks downwards here. In fact, I'm predicting it's going to break downwards. And I drew this red kind of line here on Ethereum, a week ago to kind of show the structure of which is going to do that. It's already had kind of like a bounce off the bottom, almost to the bottom, right? And now it's heading back upwards for an upside retest of the yellow line here. whether it actually gets there or not is a bit irrelevant, right? That's only like 150 USD away, and the bottom is like 200 away, so who cares? But generally speaking, what the target would be for Ethereum in the shorter term. Now, it doesn't have to happen in just like this, wherever this red line is. But the point is, the direction is downwards. The target would be the May to July lows, right? And that would line up with a 30k Bitcoin. So if a Bitcoin goes to 30k, Ethereum is very likely going to go to 1,700 because that is the relative support. So 30k for Bitcoin is the same as 1,700 through Ethereum, as seen by the lows here in May to July. So that's what we're targeting next for Ethereum. And generally speaking, I mean, I've looked at all of the indicators. I don't really see much reason not for that to happen at this point in time. The RSI is probably the one thing where I'd probably think, oh, maybe something good could happen here. MACD doesn't look too bad, but, I have to stick with the TA itself. And given the TA and given my knowledge of the TA, I would say it is the likely scenario that we break down here, because Ethereum at the end of the day isn't going to bounce further unless Bitcoin does. And I don't really think Bitcoin's going to bounce further, I think it's very unlikely. I think it's extremely unlikely that Bitcoin breaks above 47k. I think it's unlikely that it even gets to 47k, but I understand it could happen. We've got interest rates in 4 days. That's going to lead to some irrational price action. Who knows? But unless Bitcoin gets to 47k, this is going to break downwards. And so there's kind of a scenario. So I guess you got to ask yourself, do you think Bitcoin's going to get to 47k? If so, then you probably think Ethereum's going to break up. And the target for that breakup will probably be somewhere around 3,400. But even if that happens, the trend's still going to be downwards, because 47k is generally the bull market resistance, and I think even if we get there, we're very likely to reject off of it. So yeah, Ethereum doesn't look too good right now. It looks like it's going to break downwards. And the other thing I wanted to cover in this video, and you'll notice that in this video, I've done kind of 2 topics, and that's because Bitcoin is my main topic for analysis. I love analyzing Bitcoin on a daily basis. I think it's very important to analyze on a daily basis because every day new things happen on Bitcoin. And then I like to do a little conjoined video with all the other stuff that I talk about, including Ethereum and the DXY, namely. And the DXY is a chart, right? So essentially, for people who don't know what it is, and that might be quite a few people, it's not, a massively popular chart. It's actually very, very, very popular amongst experienced technical analysts, but people who don't realize the correlation probably wouldn't look at it too much. It is a chart that measures the strength of the US dollar, how powerful the US dollar is in comparison to other global currencies. And so what we can notice on the DXY, and this is kind of like the first thing you need to look at when you look at the DXY, is that the reverse correlation to Bitcoin is absolutely phenomenal, right? We have a strong reverse correlation to Bitcoin and the DXY. Okay, Bitcoin topped out, in December 2018, okay? And altcoins, so the whole cryptocurrency market cap topped out in January 2018. That marked the bottom on the DXY. We trended upwards until, when did we trend upwards until? When 2020. That is when the halving occurred. That's when the bull market started. The DXY dropped downwards when Bitcoin went up, after going upwards when Bitcoin went down, okay? And then what we can notice as well is that around the May to July period, you can notice we bottomed out in July. That is when Bitcoin started showing macro weakness with that massive kind of correction there that it had. And then this started heading upwards, and it's accelerated rapidly since November here. November is right here. That's when Bitcoin kind of topped out, and you can notice the acceleration of the DXY is going crazy. And so there is a strong reverse correlation between the DXY and Bitcoin. You could even go ahead and go on the daily chart and try to apply some fractals, and you'll notice that it's not going to be the same, but it's quite similar, okay? If you flip it upside down, and that's because, well, when the DXY moves up, that's generally pretty bearish for Bitcoin. Not always, okay, but on a longer time frame, it is pretty bearish for Bitcoin. We haven't seen a macro upwards trend, a longer time frame upwards trend on the DXY without seeing Bitcoin go down. Now we've seen maybe a week of price action gets ignored. It's not like it's correlated day by day, but generally speaking, week by week, this is a very, very, very highly correlated chart, reverse correlated chart to Bitcoin. And so when you see this thing break out of an ascending wedge formation, which is typically a bearish formation, by the way, come up to ascending wedge formation, we predicted this was going to happen, and interest rates rising will bolster this move. So it's not going to get any better. It's going to get much worse for Bitcoin. It's going to get much better for the DXY. And this is one of the reasons we've been bearish for so long, right? But this is broken out above an ascending wedge formation, which is typically bearish. So it's actually, it's a miracle that it actually broke out in the first place, but it did do that as expected. And now we've actually come up and we flipped this support box. We've just turned it green just then, actively live in the chart. That is the support box now. And we've also come back down even after the breakout and retested both the yellow and pink lines. And most likely after you do something like that, a little bit of consolidation before I move upwards again. That's generally what happens when you see something like that. Now, what I would say is that if we head over to the monthly chart, we also have breaking out, and what you will see here is something that's pretty astounding, right? You can't deny things like this. We also have breaking out on the DXY of a 21-year long consolidation pattern, okay? That is insane. We've broken that out to the upside. If we close this monthly candle above it. Now, what I will say is that we had a few monthly candles that actually went above it in 2020, April 2020, during the COVID crash with high volatility. That's why that breakout wasn't valid. COVID crash stuffs up every chart. It doesn't actually mean much. You can basically just say, oh yeah, that didn't happen. But we're looking for a monthly close above this 21-year pennant to kind of confirm its breakout. So a monthly close in the DXY above about, 97.5 would confirm this breakout, and you can bet your bottom dollar that if we break out of this 21-year pennant, we're going to head upwards on a macro scale for quite a while. All right, quite a long period of time. This is a 21-year pennant, and when you get a macro uptrend on the DXY, as I've just kind of spoken about, generally speaking, not always, but generally speaking, and on a longer term time frame, it means that Bitcoin and cryptocurrency as a whole are going to be weak. Okay, that's just what it is. When the US dollar is strong, Bitcoin is weak, generally speaking, in terms of price action. That's not my opinion. It's just the facts of the situation. You can go to any analyst on crypto YouTube and you will find the same result. So that's not good to see. Okay, so DXY is broken out of a 21-year pennant. It's broken out of ascending wedge formation, while Ethereum and Bitcoin are in consolidation patterns, just kind of barely holding support. It doesn't look too good right now, and we'll have to see what happens. But I thought I'd bring that to your attention. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Thanks.